Hello and welcome back. François Savary, bonjour.
Hello, Mark.
Thank you for joining us. Let's do our analysis of the Monday morning in two parts today. Let's look at what happened in yesterday's German election results. Let's look at the US markets that were slightly softer, that sold off a little bit on Friday. First of all, let's turn to Germany. Friedrich Merz, widely expected to be asked to form the next government by the German president. I think that's how it works. He has distanced himself quite a lot from previous chancellors in Germany, especially the last two, obviously. How is this going to affect Europe and, in fact, by extension, the rest of the world?
Okay, the first thing that we need to be aware is that Mr. Merz was quite lucky yesterday because two parties were very close to get to the 5% threshold to get into the parliament, which would have made his work much more difficult because to build a coalition which have been much more difficult. The fact that the FDP and BSW parties were not able to reach the 5% make the work of Merz easy. Nevertheless, he still faced the necessity to find a compromise with the SPD. SPD lost. It was a big loss for the SPD, the worst result since the Second World War. So what does it mean? It means now that the SPD is going to negotiate very hardly and very strongly its participation to the government. And that's something that we need to be aware. That being said, it's very interesting to notice the reaction of the market this morning or overnight in Asia. The European future is up 0.5%. The euro is above the 105 level. The main reason is because at the end of the day, finally, it's a result that were expected by the market. So the market is happy to see that Mr. Merz is able to build a coalition. Moreover, we all know that the fiscal cap was a big issue. Mr. Merz has opened the door to the possibility to revise that. When you look at his declaration lately about the fact that he is quite aware that now Germany and Europe needs to take care of its own security with regard to the US, is going in the same direction, which is supportive for European and German assets in particular. So the market is reacting quite very well. It is logical to my point of view. Can it last? It will depend on how long it will take to build a coalition. That's the first thing. It can take months, it's not something that it can take months to get an agreement on the program for governing the country. So that can, again, unsettle the market a little bit. And then we need to have really some key elements and real elements about the fiscal cap issue that needs to come to life very quickly. So I think that volatility is going to remain with us, but the European market are reacting quite well, and it's a good development.
Mr. Merz has always been known as a fiscal hawk, and he was one of the ones pushing against abandoning the debt brake. And yet now markets expect Mr. Merz to be as positive for the markets because he will allow the fiscal brake to the debt brake to be loosened slightly. Is this a big relief for the European markets? Is this going to carry European markets?
I would say that you need to put that in the perspective of what the European Commission said lately. Mrs. von der Leyen came out with the idea that they could, in fact, make easier for government to go above the threshold of 3% of debt over GDP, over deficit over GDP. And you need to put that into the context. It's clear now that the European Commission is loosening the rule of the Stability Pact. So I have a lot of doubts about the fact that they would rescue France. And I have a lot of doubt about those kind of rumors. I think that what is key, you need to differentiate two things when it comes to Merz. Merz would accept the notion that you can, because it's defense spending, you can loosen the fiscal pact. What is another element that you need to have in mind, and where Merz is a bit stronger against the idea, is the common debt issuance, because also that the European Commission is floating the idea that maybe we should substitute the program that was put in place for COVID into a new program that would be used for the military spending. But there, Merz is more cautious.
Now, there's not only has Mr. Merz been a hawk in terms of fiscal spending, but also he's been a hawk in Ukraine. And very recently, he's been very forthright in his views that Europe needs to take its own direction, needs to be independent of the US, and needs to start building up its defense structure. But that also means its defense sector. It's industrial base. With peace being talked about so much in the last few months in Ukraine, is that why European stocks are playing catch up? And if Mr. Merz does go ahead and back Mr. Macron with this big new idea about an independent European defense structure, is that going to force stocks higher, especially on the back of the defense sector going up?
Yes, I think so. I think that this is a key element. It can support the equity market because at the end of the day, if you have military spending increasing significantly, you know that when you look at the numbers that were floated by Bloomberg in the last few weeks was that over the next 10 years, it means in order to really build something that creates a security framework that is independent or more independent from the US, it would cost 3.1 trillion US dollar in the next 10 years. So it means that at the end of the day, this is a huge amount to be spent. It would support economic activity. And this is something that would help economic growth so that, and it's not only, you have then the indirect effects connected to the fact that you need to spend more on military, but then you need to build companies, you need to build the facilities, you need to increase the capacities, and etc., and etc., etc. It creates purchasing power because you have people who would produce and etc. So it's creating something. So yes, it can support. But nevertheless, this is a challenge for the European Union. And this is not only the spending that matters, is where do you put that spending in a more global context where Europe is facing a lot of challenges in terms of innovation, in terms of being able to catch up on the technology side, all those elements which are key, which relates to the Draghi reports that was published in the last quarter of 2024. So you have a lot of factors that need to be put in place in order for Europe to really change course in terms of economic and stagnation.
Do you believe in the opinion that Donald Trump has a vision of separating influences throughout the world between three countries, i.e., the US, Russia, and China, and allowing those countries to extend their sphere of influence within defined borders? Do you think that is what Donald Trump is trying to do?
This is something that you can hear. Yes, if you are European, you can see to be the continent that is going to be left apart in a negotiation between three powers. It's very, very difficult. The vision of Donald Trump, the term vision for me is quite strange. We all know that, and he defends himself as a deal maker. He's somebody who's trying things. I don't know if he really has a vision, if himself he has a real vision about what he wants to do. He's trying to put the things, trying to observe how people are reacting. But what is sure is that Europe needs to act very quickly on different fields. As I said, it's not only the military they need to do something. They need to rethink what they have done in terms of environment norms, in terms of regulation, in terms of innovation. All those elements need to be put on the table. And it's not a matter of acting quickly. It's a matter of acting decisively in terms of you need to have a full project to be able to really give something new to Europe, because Europe is coming to a point where everybody doubts about its ability to survive in the medium term.
All right, let's turn to the US markets now, which sold off slightly on Friday. We're just a few percent off the all-time highs anyway. But the market did react slightly negatively to softer US economic numbers. Do you think this is a new trend?
I would say there are two elements that you need to have to answer your question. First of all, if you take the Friday was not a good day on the US equity market, but in general, last week was not a good week on the US equity market. It's the first week of the year where the performance was negative, and this is something that is quite surprising. It is also, you need to have in mind that since the beginning of the year, European equities are outperforming quite significantly US equity. You really have a feeling that the US equity market is coming, quote unquote, to an end to the uptrend that was in place over the last 18 months. Something is cooking, I think, and we have discussed that issue over the course of the last few months, that the market is facing some kind of consolidation. And I still defend the idea that you have room for a consolidation that extend in the US over the coming weeks. When it comes to the numbers, I think that people should not overcome them too quickly. Because, for the last 10 days, the economic number in the US have not been particularly stellar. You had the retail sales, which were weaker than expected. You had the CPI numbers and PPI numbers that were not good, that were telling you that there is a stop in the decrease in inflation in the US. You had the real estate market that is not that great, the NAHB, which is an index of the real estate sector in the US, was quite weak. And you had on Friday those Michigan numbers that were revised downward, and you had the ISM number, especially for services, which has been a strength for the US economy, that came much below expectation. So I think those are warning signs. They are not telling you that the US economy is falling into a recession, but they are telling you that maybe there is some slowdown in the US economy that is happening for the medium term. It's nothing that you need to be afraid, but it tells you that you need to get ready for some volatility on the market. And that's what I take from those numbers on Friday and the reaction by the market.
So talking about the gentle slowdown in the US economy, let's give praise where praise is due, although maybe you won't agree with me. But don't you think Jay Powell has achieved his soft landing?
Very difficult. It's only after a while that you know if a soft landing has been realized. He is worried. The fact that the minute of the Fed tell you that they are worried about the inflation. They are really worried about the fact that maybe they have come to a point where they have more difficulties to bring inflation lower. Yes and no. I would say I know it's not an answer, but yes, he can be happy to see that despite the fact that the US economy is still strong, that the unemployment is very low, they have been able to bring down inflation. No, because he needs to be worried that the inflation has come to a standstill and that it is not falling down to the level he would like to see it. So he needs to work more. We are living in an environment where we need to have in our mind that we don't know the impact of potential tariff on inflation. We don't know if Mr. Trump is going to come very quickly with a new tax cut because this is some part of his program. So those are elements that the Fed needs to take in place to decide if they have done the soft landing or if they need to keep the monetary policy where it is for much longer in order to assess the political developments.
Now, coming to a subject we've never really discussed, Warren Buffett, his cash holding keeps increasing, and yet he's not communicating about what he's doing, although he's obliged to disclose his position at the end of each quarter, I think. However, he's not communicating what he's doing and why he's doing it, and whether he's going to continue doing it. What does Warren Buffett know that we don't know?
I think that he doesn't, we are all aware that the US equity market is quite expensive. We all know that the risk premium on the US equity market is very low. Mr. Warren Buffett is a very smart and he's quote unquote, a genius. He's a guy who knows that for the time being, to put your money at risk in an equity market, which is close to record high, where companies that are cheap are quite limited, where you have some kind of uncertainties on the political front. Why do you want to get out of cash? This is what he's doing. He's observing the situation. I have read a few things that it could be interested in investing in Japan, that he would be interested in buying some stocks there. So he's still playing his game, which is to try to find how to purchase stocks at a very good price with very good fundamentals for the medium term. This is the Warren Buffett way of investing, which has been so efficient and so good over time.
Francois, I think that's all we've got time for today. Thank you very much indeed, and speak to you next Monday.
Okay, have a good week.
You too, bye-bye.
Bye-bye.